This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashardis. Thanks for joining us at XM.com. The Federal Reserve struck a more positive tone on the U.S. economy on Wednesday as it kept monetary policy unchanged as widely expected. Policymakers acknowledged the progress on vaccinations and greater flow of fiscal stimulus, but maintained that policy would stay unchanged until there's been substantial further progress towards meeting their employment and price stability goals. But while Chair Jerome Powell mostly stuck to the script, he did provide a little more clarity on what the Fed is looking for in its quest for further progress in the recovery. His dovish remarks pulled Treasury yields lower, and the dollar tanked, hitting one-month lows overnight. However, the 10-year yield quickly rebounded and is back above 1.65% today, suggesting that the markets don't think the Fed will be able to keep rates near zero for too long. The dollar also managed to bounce back from its lows, though the technical picture for the greenback remains rather bearish in the near term. The recent improvement in the economic outlook in some other parts of the world, notably in the Eurozone and Canada, have taken some of the shine off the dollar. The euro is trying to establish a foothold above the $1.21 handle, while the loonie extended its advances on Thursday, climbing to a fresh three-year high. But there could be some upside for the U.S. currency later today from the Q1 GDP report, as annualized growth in America likely surpassed 6% in the first quarter. U.S. stock futures were also up sharply, hinting that some life may be returning to Wall Street after a muted performance in the previous three sessions. A solid start to tech earnings by Tesla, Microsoft, and Alphabet failed to set off a fresh rally, even though both the S&P 500 and Nasdaq Composite modestly scaled all-time highs this week. But Nasdaq futures were pointing to a 1% opening gain today, following exceptionally strong results from Apple and Facebook after Wednesday's market close. Amazon and Twitter will be reporting their results after today's closing bell. This week's steady but notable rise in Treasury yields could be weighing on U.S. equities, and if Apple's earnings beat is unable to set Wall Street alight, it doesn't bode well for the rest of the earnings season. This is today's Daily Market Comment. Thanks for joining us at XM.com.